Thanks. A very good evening to all of you. I welcome you all today to a very interesting virtual seminar on internal audit, that is, Standards on Internal Audit, Keeping Pace with Reforms, which is organized by Internal Audit Standards Board of ICI and hosted by Chandigarh branch of NIRC of ICI. Now, I would firstly like to invite C. Anil Kakkar sir, our respected chairman sir of Chandigarh branch of NIRC of ICI, who is a fellow member of ICI, law graduate and a practicing chartered accountant since 2002, partner of Messrs. Kakkar and Associates Chartered Accountants. Area of expertise and interest is direct taxation. Sir also held position of vice chairman, secretary and treasurer of Chandigarh branch of NIRC in the past. So please say a few words.
Thanks a lot, Anaita.
Thanks.
Good evening to each and everyone present. Respected learned viewer, first of all, I, on the behalf of Chandigarh branch, would like to thank CA Charanjot Nandaji, Central Council member from Northern Region, Chairman Internal Audit Standard Board of ICI, and CA Gyanchand Mishra-ji, Central Council member from Central Region, Vice Chairman of Internal Audit Standard Board of ICI, for giving our branch the opportunity to host today's webinar on Standards of Internal Audit, Keeping Pace with the Reforms. I express my sincere gratitude toward the both of the guest speaker, CA Dr. Dheeraj K.S. Sharma ji and CA Nayan R. Kothari ji, for taking out their precious time to enlighten all of us with their expert knowledge on the topic, that is standard internal audit on risk management, governance, and compliance with the law and regulations. To discharge our professional responsibility as an internal auditor, we all must have knowledge of these standards, that is the standards on internal audit, as these are the pronouncement which form the basis for conducting all internal audit activity and establish uniform evaluation criteria, methods, processes, and practicing for doing internal audits. I am of the firm belief that we all will have addition to our knowledge from today's session. Last but not the least, I welcome all the learner participant also, and thanks to the entire team of Internal Audit Standard Board of ICI for organizing today's webinar. Thank you so much. Stay healthy, stay updated. Over to Anaita.
Thanks. Thank you so much, sir, for your kind words, and thank you for joining us. Now, I would like to invite C. Charanjot Singh Nanda, sir, who is a Central Council member ICI, presently Chairman of Internal Audit Standards Board and Digital Accounting and Assurance Board ICI, Vice Chairman of Banking, Financial Services and Insurance Committee. Sir served as chairman of various committees like Committee on Professional Development, Women Members Empowerment, Members in Industry, and many more. Sir also served as vice chairman of various committees like Committee on Public Finance, Government Accounting, Research Committee, and many more committees. Sir was also member of Quality Review Board, SEBI Advisory Committee, Southern Asian Federation of Accountants Committee, and various other committees. Sir also had been the convener of the expert group constituted by Ministry of Corporate Affairs on investor protection. Sir, please say a few words.
Thank you, Anaita.
Thank you.
My salutations to the chairman, Chandigarh branch, C. Anil Kakkar, who happens to be the host branch. Two of my very dear friends, rather younger brothers, CA Dr. Dheeraj K.S. Sharma, past chairman Gurgaon branch, who now resides mostly in Sikar, Rajasthan. CA Nayan R. Kothari, chartered accountant faculty of concurrent audit course, who resides in Baroda, and all who have come here to go home enlightened. Ladies and gentlemen, your board, the Internal Audit Standard Board, is very keenly involved in holding as many seminars on professional topics as much as possible. Today we have two speakers. Dheeraj will speak on SIA 130, which primarily deals with risk management in conduct of assignments of internal audit. And CA Nayan R. Kothari would speak on SIA 140, which is on governance, and SIA 150, which is on compliance with laws and regulations which are necessary in conduct of the internal audit assignments. Ladies and gentlemen, the basic purpose of holding these seminars every Saturday is to hone your technical skills. I'm reminded of a couplet which says, "Gar khairat mein milti kamyabi to har shakhs kamyab hota." अगर खैरात में मिलती कामयाबी तो हर शख्स कामयाब होता, फिर कदर ना होती किसी हुनर की और ना ही कोई शख्स लाजवाब होता. If you want to grow high, if you want to become technically strong, it is only your knowledge which will take you here. Give me a second, I will just share my screen and come out with my keynote address. Give me a second. Anita, my screen is visible?
No, sir.
Just a second, give me a second. I hope it is visible now.
Yes, sir.
Great. So, ladies and gentlemen, I want to take you to the basic impetus of this seminar, which is standards on internal audit, keeping pace with reforms. Yes, and now I'll take you to the basic structure of this program. The first thing is need of SIAs, need of standards on internal audit on key concepts. Why do we need them? The first very important is that the Companies Act 2030 places a strong emphasis than before on the role of Audit Committee on internal financial controls and risk management, testing of internal financial controls, risk management, and more importantly, how Audit Committee will ultimately steer the entire company perspective is very important. All of you very emphatically know that internal audit essentially is a management function, and therefore the reporting is either to the board or to the Audit Committee, but the results are always manifold. Now, given the importance of these areas, internal audit's assurance role is very important in helping audit committees and directors fulfill their overall responsibility and legal duties. The reports which are tendered by the internal audit provides the audit committee with a key source of information on the organization's performance and, more importantly, assurance on risk management, governance, and internal controls. I want to tell you that risk is essentially the appetite of the board. But somebody once asked me, said, Mr. Nanda, can you tell me one business where there is no risk? I smiled and said, my friend, I'm a CEO of 30 years old. But I want to tell you that where there is no risk, there is no return. Where there is no risk, there is no understanding, there is no systematic movement, there is no growth. So, ladies and gentlemen, risk management will ultimately take you to that parlous. You all need to understand that an optimized internal audit function can always provide a balance between protecting and enhancing enterprise value by taking a holistic approach to risk management across the enterprise, governance framework, and legal compliances, and thereby providing independent and objective assurance with value-added services. The services provided by an internal auditor can never be undermined. They are all par excellence. The SIAs which will be discussed today, 130, 140, 150, would cover, first of all, risk-based internal audit. Secondly, responsibility of the board and management with respect to these key concepts, which is again very, very important. And issuance of independent assurance of three very important things. Number one, the risk management framework, which will ultimately pave the path for greater movement on the greener pastures by corporates. The governance framework, which is again very important, and the compliance framework, which ultimately gives an error-free environment for the corporate to function. Now, as an internal auditor, what is expected from you? Number one, you need to apply these standards while risk management, governance, and compliance framework is subject matter of an audit. Very, very important. Second, you need to clearly understand the responsibility of the board and the management so that you are able to effectively render the services, which are very important. And then, again, a very important facet of your professional practice, you need to evaluate whether these frameworks are more efficient and effective in line with stated objectives. The objectives need to be aligned with the frameworks. And lastly, recommendations over shortcoming and improvement for these frameworks. If you find the frameworks are lacking in something, you need to always go ahead and give your recommendation so that the entire thing can be put into the right proposition. So, ladies and gentlemen, I would now come back. I have made my presentation. So I come back to you and I would take things further. Give me a second. Yes. So I'm done with my presentation. Now we're looking forward to the scintillating presentation of both Dheeraj Bhai and Nayan Kothari ji. Over to Madam Anahita for further proceeding. Madam, the dice is all yours now.
Right. Thank you so much, sir, for sharing so much knowledge with us in a very wonderful manner. Thank you so much, sir, for providing us this opportunity. Now, I would like to invite CA Dr. Dheeraj K. Sharma, sir, for a first session on Standard of Internal Audit, SIA 130, that is Risk Management. CA Dr. Dheeraj K. Sharma, sir, who is a co-founder and Chief Executive Officer in Devale eLearn, currently working as Vice President in Sankalp Management Consultancy Private Limited. Sir served as Chairman of Gurugram Branch for 2020-21. Besides being fellow member of ICI and doctorate in management, Sir possesses multiple certifications from various prestigious institutions, including IIM Bangalore, IIT Bombay, and IIT Kharagpur. Sir also conducted 500 plus knowledge delivering programs with reputed institutions. Thank you.
Thank you. Thanks a lot, Anahita ji. Thanks a lot for such a nice words, and very warm greetings, warm regards to none other than the chairman of IASB. And in fact, I must say the founding chairman of IASB and the person who is serving as a chairman of IASB since last 4 years continuously and putting all his best possible efforts to ensure that the unparalleled and remarkable work is done by IASB. Even in COVID pandemic period, even in normal days, and in fact on every weekend they are coming out with such nice presentations, discussions, putting their efforts to release some guidelines, new SIAs, developing some checklist for different kind of internal audit activities as well. So warm regards to the person of who is leading this entire board, none other than CA Charanjot Singh Nanda sir. Yes. Warm regards to Chairman of Chandigarh branch, Chairman of the session. My salutation to CA Anil Kakkar sir, and very learned as well as very humble, just like my elder brother CA Nayan Kothari ji from Vadodara, the person who really have too much knowledge, but whenever we talk to him, we realize that the proverb that the person who are with knowledge, who are with quality, they are always humble. So this thing resembles in Nayan Kothari ji's personality. Even 2 times, both of us have conducted physical sessions also together. One in national conference in Indore, and another one it was in national conference in Vadodara. Both the times, I really realized I was amazed with his knowledge as well. So it will be a great opportunity for me as well. That in the second part of this session, I will also learn a lot from him. Warm greetings to entire team of ISB and all the participants who joined us today. As very well described by Nanda sir, to set the tone of the entire session, and not only the tone for this session, but the series of sessions on internal auditing, covering different internal auditing standards. So to continue with this, few things which I would like to highlight in relation to internal auditing, in relation to responsibility of an internal auditor, in relation to the applicability, the governance, the benefits, the purpose, and the impact on the quality of internal audit, which was made by such standards on internal auditing. So I believe most of the participants, they are aware that internal auditing standards were issued years ago. Then they are redesigned. That means IASB is putting their efforts not only to release new standards, but also they are putting their efforts to revamp, to redesign, redraft the existing standards as well as per the need of the time. So let me start with my presentation. The title of SIA 130 is Risk Management. Earlier it was SIA 13 with few modifications. It has been modified, and now it has come out with new name or new order of the standard, SIA 130. Let us talk about the preface of internal auditing standards. before I jump to the risk, I jump to the risk mitigation process, I jump to the all other parts. We all know that Section 138 of Companies Act 2013 is governing section for internal audit. And as per this section, if we go through in detail with this section, we find that an entity where the internal auditing function is required, the entity can either appoint a firm of professionals to conduct their internal audit, or the entity can develop the in-house internal auditing function in their entity, in their organization. So it can be either internal agency or it can be an external agency to conduct internal auditing function in an entity. That's perfectly fine. So again, this section says, who will be the professional who can be appointed as an internal auditor? The company can appoint a firm of chartered accountants, firm of cost accountants, or firm of any other professionals. There is no mandatory requirement to appoint a chartered accountant only as an internal auditor. So one question comes in our mind: if in a company, if an organization where the internal auditor is not a chartered accountant, then what is the role of such standards on internal auditing are there? That's a good question. Another question is there: if an employee working with a company leading the internal auditing function and he possesses the qualification of chartered accountancy, then whether any rules, any provision of standard on internal auditing are applicable in any manner on that particular professional. Let me clear one thing. These internal auditing standards designed by ICIR applicable on every member of institute, every member of the Institute of Chartered Accountants of India, whether he is in practice or in job and engaged in internal auditing function. So if a company appointing a firm of chartered accountants as an internal auditor, these SIAs are applicable, and non-compliance may lead towards the professional misconduct. In the another scenario, let's suppose I am a chartered accountant, I am working with an entity and I am their internal auditing function head. Being their employee, I am leading their internal audit function internally. Then again, irrespective of the fact that I am not a chartered accountant in practice, I am their employee, still the internal auditing standards are applicable on me as well. But where the person who is leading the internal audit function is not a member of ICAI, in that case, these are recommendatory. So that is the preface that is required to understand about the applicability of all these SIAs, which we are going to discuss in the session and which have been discussed in the earlier sessions as well on the platform of IASB. Second thing, what is the structure of each and every internal auditing standard? IASB always, as I have mentioned already, Nanda sir highlighted that what efforts the people are putting at the platform of IASB. So they come out with any standard. More or less, it is divided in few parts. The first part that says the introduction of that particular standard. That means the brief about that particular SIA. What is the scope of that SIA? What are the applicabilities of that SIA? Second one that comes out with the objective part. That means the particular SIA, let's say 130 or 140 or 150, which we are going to discuss in today's session. So what is the objective of that particular SIA? What are the desired outcomes that is covered in the third part, that is the requirement part. Desired outcomes are what? What we are expecting after complying with this particular SIA. Then they come out with explanatory comments and implementation and application of that particular SIA. So some explanatory comments, some recommendations, some things that have been provided by IASB, and then the effective of that. At the date from which that particular SIA will be applicable, or it will become mandatory instead of being recommendatory. Besides this, whenever you read any SIA, please listen carefully. Whenever you read any SIA, please follow the implementation guide and technical guide as well. If it has been provided by IASB, if it is available, then please read out the implementation guide and technical guide as well. Both the things are helping us to understand the best practices. They are helping us to understand how the best approach is to be designed and to be implemented while conducting the internal auditing and ensuring the compliance of particular SIAs. So this is the structure of each and every SIA. We will discuss the structure for 3 SIAs today. Then there are some basic principles also, which we need to understand before jumping on the SIAs. Anybody, please ask this question to yourself and note down your answer. What are the basic principles which are governing the internal auditing functions? I'm not talking about internal department. I'm not segregating the external agency. I'm just talking about the basic principles of internal auditing. You can list out few principles: independence, competence, professional capacity, responsibility, objectivity, confidentiality, integrity, whatsoever. Please list out those basic principles. Now forget about internal auditing. Now forget about it. Let us jump on code of ethics. Let us jump on code of ethics and search what are the basic principles of code of ethics which are applicable on chartered accountants. And you will find that the basic principles which are applicable, or which are, we can say, which are the base of framework of code of ethics, are same as the basic principles governing internal auditing function. If you talk independence, if you talk integrity, then objectivity, then due professional care, then confidentiality, then your skills, your competence, all these. So that means non-compliance of any SIA, it's directly hitting non-compliance of code of ethics as well, and it may lead towards professional misconduct. So understand this thing as well. Now moving on the today's topic of the first session, particularly on risk management, SIA 130. Ask one question to yourself. What do you mean by risk? Very well quoted by Nanda sir, that if there is no risk, there is no gain. If we are assuming to get any reward without taking any risk, then it is completely on the mercy of God, completely in the hands of mercy of Almighty God. We cannot expect anything without taking any risk. If I am thinking to get anything, sitting at my home without doing anything, without putting any efforts, is it possible that I will get what I am desiring, except having the desire of sleeping day and night? Risk is everywhere. And if you talk about business, what is the importance and what is the relevance of risk? Please go through with this. Some people, member of board of management of an organization, and they are discussing about risk. They are discussing about risk plan. And what they are discussing, that we have considered every potential risk towards our new project, towards our existing business, towards our any new decision, whatsoever the case may be. We have considered every potential risk except the risk of avoiding all the risk. If you are thinking to avoid all the risk at a point, that means you are taking the greatest risk of doing nothing. If you are trying to avoid all the risk at the same time, you are taking the risk of missing a lot of things. You are taking the risk of not doing anything. So that means in any business, we cannot bypass the risk. And when we understand about risk, basically in simple language, we can say any kind of exposure to the entity, to the organization, to the company, which can impact, which can lead towards significant loss to the entity. Loss in the terms of financial loss in the terms of reputation loss, that means loss of goodwill, loss in the terms of future opportunity loss, that means any exposure leading towards loss to the entity, that is risk. Now, the quantum may be different, impact may be different, regions may be different, types of the risk may be different, but overall we can say any exposure leading towards loss to the entity is risk. That is risk. And reading while SIAs, at the same time, we must read essays as well, standards on auditing as well. And while we start to read essays, we will find that there is one essay, essay 315. And what does essay 315 deals with? Essay 315 says, it talks about identifying and assessing the risk of material misstatement. Through what? Through understanding the entity and its environment. So two things from this heading only. I have noted down two things from this heading only. The first thing, always take the understanding of the entity and its environment. That is the first factor to identify the risk, to lead towards the risk management, risk mitigation framework, risk management framework, and all these things. The first thing is understand the entity and its environment. Second thing, which also comes from this heading only, that is, after understanding all these things, now identify the risk and assess the risk of material misstatement. One thing which we will discuss in the later slides, what the materiality means here. There may be any risk, but the impact of that particular risk, that can be very lower. The probability of that particular risk, that can be very lower. So in that case, our action may be different. But if the impact of the negative impact on the entity of a particular risk is potential, it is really damaging the operations of the entity, it is really damaging the going concern concept of the entity, that means it should be prioritized while responding to other risk. There are different types of risk. In the first phase, let's discuss fourth risk, inherent risk. What do you mean by inherent risk? If I am doing any activity in an organization, if I am doing any operational activity, so in that particular activity, there are certain risks, there are certain exposures, and these are inherent part of that particular activity. In any manner, neither we can avoid them, nor we can control. Neither we can avoid nor we can control. These particular risks are inherent risks. Let us take an example. I am driving. I am moving from Jaipur to Ahmedabad with my car. I am driving. And this is approximately 600 kilometer driving. Though I am following all the rules, I am obeying all the traffic rules. That's okay. So that means I have mitigated the risk of challans. I am driving safely. That means I have mitigated the risk of undue possibility of accidents from my side. But can I say that now I am very much safe? Can I say that there will not be any kind of a situation of accident? I am very much safe on the road because I am driving safely and I am following all the rules. Still, the risk of accident by the mistake of any other driver is still there. Accident caused due to any animal on the highways, that is still there. These are inherent risks. Being a driver of the car, I cannot avoid or mitigate the risk of mistake done by other driver. That is the inherent risk. Neither we can mitigate, we can avoid, or nor we can control. Second risk is the control risk. There are certain risks that can arise because of a particular situation, particular activity, particular action. But we can control those risks. We can implement sufficient, adequate internal controls to avoid these risks, to avoid the negative impact of those risks. So that can be considered as the control risk. Third one, we can say the risk of uncertainty based risk. We don't know. Nobody has assumed in March 2020 that in next 20 days, we are going to face nationwide lockdown. Nobody has presumed that there will be the global pandemic situation, very much pandemic situation in the entire globe. The governments of the countries, global organizations, UNICEF, WHO, in fact, UN as well, everybody was worried about it. Businesses were worried about it. Many of the businesses, they have to shut down their operations permanently. Nobody has predicted COVID-19. That is uncertainty-based risk. We can't do anything about it. We can't do anything about it. What we can do, whenever we smell any kind of such risk, whenever we smell, take immediate action. Accept it, we can't do anything. Another one is the opportunity-based risk. There are certain situations when you are doing very good in your business. You are doing very good in your business, but at the same time, somebody else is putting their efforts on R&D, and after putting their best efforts on research and development, they have developed one new product or new line of services which can replace your existing product or existing line of service immediately or in a very short span. That means risk of opportunity. There are certain opportunities, but you missed it. That was the situation of COVID-19. People were in their home. Schools were, in fact, declared holidays for the entire year. Students were promoted without giving you any exam. What happened? Some people absorbed the risk, the opportunity. In the risk of COVID-19, the people have identified the opportunity of online learning. They have identified the opportunity of online selling and distribution. The people identified selling medicines through online platforms, supporting people through app-based service applications. That means identify the opportunity in the risk as well. Let me give you an example. There were certain companies, Philips and all, which were famous producers, manufacturers of transistors, radios. So the radio, and in the Akashvani, the radio took 38 years. The radio took 38 years to reach 50 million listeners. It took 38 years. The people have put their best possible efforts. In fact, 50 years ago, person have to obtain license for the radios as well. If you ask your elders, they will tell you that 50 years ago, that was the situation where if anybody want to purchase a radio and use it, so they have to purchase the license, they have to pay the license fee as well. It took 38 years to reach 50 million listeners. Now some other companies, Bosch, Daewoo and Samsung and other companies, they tried to put their efforts on R&D for picture tube based some televisions. Semtel was the greatest company, Newton was the greatest company, which were manufacturer of picture tubes for televisions. So they come out with televisions, and television took only 13 years as compared to 38 years to reach 50 million viewers. That means they have created some new opportunity, and it was the greatest risk for radio manufacturers. But what happened next? Somebody come out with internet, Google search, Yahoo and all, and it took only 5 years to reach 50 million users for internet. So that means if you have paid 30-40 years in a business, it doesn't mean then somebody else cannot surpass you in the shorter span. If they have good R&D, the risk of obsolescence, the risk of competition, the risk of advancement in the product and service line, it is always there. You have to compete with the new technology. You have to cope up with the new technology. And if your client, if your entity is not doing so, being an internal auditor, you have to check out these risks as well. Second types of risk, that is legal risk. Risk because of non-compliance. You didn't do any non-compliance, so you are fighting for court matters. That is legal risk. Risk of strategic issue. There may be some competitive advantage. You have to fight with your competitor, and because of some good strategies, they have crossed you. So the risk of a strategic competitive advantages are also there. Now the reputational risk, that means the risk of goodwill. How it can occur? Negative feedback from customers, poor performance, poor support by your staff members. Once a message, it is passed to the general public that this particular entity is not good in the terms of service quality, in terms of business ethics, in any term, that is the risk of reputation, goodwill risk, negative feedback risk. Another one is the operational risk. The entity is trying to put their efforts to develop new product line, new thing, but there may be the chances of the process failure. So that is also risk. So while following a process or while developing a new process, then also you have to check out the RCM's risk control matrix at that time. That is there any risk of process failure is there. I have seen some companies, I am not disclosing the name, few companies where just because of process failure, they have to shut down their operations. The concept of going concern, that affected them. Some very famous examples are also over there. Kodak. Everybody know about Kodak. The company which were working for almost 140 years. The world's number one company in filmmaking. Number one company in real cameras. What happened to Kodak? They were declared bankrupt. And why it happened? When the people were putting their efforts for R&D, the people of Kodak were only focusing to sell more and more camera reels. They did this mistake and they got absolute. Tata Nano, it was very good car, cost efficient. It was really a dream car of many of the lower middle class people. But still it failed. Why? Because of only one thing. In the market, it was tagged as Garibon ki car. And once it was tagged as Garibon ki car, instead of considering the benefits of Tata Nano, the cost efficiency of Tata Nano, people started to think that I will be considered as Garib. So they felt that my bike is better than Tata Nano. It was failed. Kingfisher failed due to their financial mismanagement. So these are the examples of the companies which have suffered because of some risk. Type 3 risks are also there. Some human risk. Loss of any human life in your company. That means due to lack of the safety measures. Another human risk can be loss of good HR, good human resources. Lack of good HR policies. Any risk caused due to human resources. The security is also there. Security, first in terms of IT, in terms of R&D, and in terms of physical security as well. There may be the risk of security. Let's suppose you are having your company in a particular area which is very much sensitive. On a single WhatsApp message, there is the possibility that riots, communal riots, or some other riots can occur in that particular area. On rumors only. So there is always a security risk for your company or staff members. There may be the security risk in terms of data security, IT asset security, your IPR security. There may be the security risk in terms of your R&D asset and all. Now the financial risk, yes, it can cause due to immature investment decisions. It may cause due to failure of your financing activities. It may cause due to excessive burden of the loans, excessive burden of the interest cost as well. And the last one is hazard-based risk. I have included this one because this is the time when we people are talking about sustainable development. This is the time when we people are talking about ESG, environment, social, and governance. This is the time when we people are talking about BRSR instead of BRR. So when we are talking about sustainability reporting, when we are talking about business responsibility, we are talking about environment, social, and governance part. So at that time, hazard-based risk, that means any risk, any factor which is affecting the environment negatively, that may also be the greatest risk for me. It can be risk for my employees. It can be risk, it can lead towards the legal risk as well due to some mistakes, due to some harmful activities to the environment. NGT may fine us. NGT may close down the operations. NGT may impose, National Green Tribunal may impose some restrictions on us. So hazard-based risk, or I can say environment-based risk, these are also to be considered nowadays. Now the question is how to manage the risk. Okay, we have understood what are the risks. Now the question is how to manage these risks. First of all, understand one thing, that the risk management is a continuous process. This is not a one-time activity. This is a continuous process. You can say that one-time activities, we have done so and so, 1, 2, 3 activities. But this is an activity which is to be undertaken continuously throughout the operations of the entity. And let me give you one example. The company has started new showroom. They have opened the showroom. So they have assessed all the risk of credit, risk of risk regarding human resources, risk of security, and all these risks they have considered. After 3 years, can they say that all the risks are same, all the management strategies are same, and we can say the controls are still equally adequate and sufficient towards the risk? No. 3 years ago, one of my customer was Nayan Kothari sir. He is a very good person. He paid all his debts on time. So I can give him 30 days, 60 days credit. I have good experience with him. Now, after having good experience with him, I have started to give credit to all other customers as well, without assessing the risk of repayment of debt from them. Just merely based on my good experience with Nayan Kothari sir. And out of these new customers, somebody has created the risk of bad debts for me. Somebody has created the risk of loss of interest cost on the credit given to that particular party. I may have to do compromise. I may have to do some settlements with that party. So that means the financial risk is to be reviewed regularly. Similarly, the physical risk and all these risks, security risk and all. So risk management is a continuous process. And what we need to do in this process, first list out, identify the risk. What are the risks are there? List out the risk. What are the risks are there? Once you identify the risk, okay, these are 3, 4, 5, 10 risks for a particular process-wise risk. What you can do, you can analyze some activities. You can perform some testings. You can go through with the risk control metrics, and you can understand the process and understand the process risk. So this is the first process of identifying the risk. Now the second one is assess the risk, the level of severity, the level of their impact, level of their materiality, as we read in SA 315, then 320 also regarding performance materiality, and their likelihood, that means their probability. SA 315 we are discussing, SA 320 also talks about materiality in planning and performing in an audit, calculating the materiality. So if there is a risk, there are certain reasons to believe that the probability of this particular risk is high, but similarly there are certain reasons to believe that the impact of that risk are very low. So that can be at the end of my priority list. There are some risks when the impact is very high that can impact the going concern of the entity, continuity of the entity, business continuity plan of the entity. So in that case, that should be my prioritized risk. Now that prioritizing risk, I have done this based on their materiality and their impact. Now take the actions. Define the actions for each and every risk. What we do in RCM, we list out risk in a process, then the controls, what we are doing, then we do the testing of controls as well. So take the necessary actions to avoid, to mitigate, to transfer, to accept the risk, but to do all these things and then minimize their possible negative impact. Again, I am repeating the word which Nanda sir has started in the session. And I have also mentioned in a slide, we cannot say that 100% risk is avoided. We cannot say that 100% risk is mitigated. We cannot say that there is zero risk. We cannot say. We can never say that there is zero risk. So what we can do, we can just try to minimize the possible negative impact of the risk. Due to any risk, if there are some negative impacts, so we can just minimize those risks, we can just minimize those impacts. That should be our target. That should be the process of risk management. Accordingly, we take some mitigation actions. We design risk management framework. We take some examples. So all these things we have to do. Now moving ahead towards the risk mitigation. We have discussed about risk, causes of risk, types of risk. Then we have discussed about the risk management. In the risk management, that was the last process, that was minimizing the possible negative impact of the risk. minimizing the possible negative impact. And how we can minimize? Through the process of risk mitigation. So what is the process of risk mitigation? First of all, what we can do? Avoid the risk. Now you will say, Dheeraj, you told that we cannot avoid the risk 100%. Yes, sir, I told you we cannot avoid the risk 100%, but we can avoid the risk 5, 10, 20, 30, 50%. We can avoid that, considering the impact of avoiding the risk as well. So first thing is avoid the risk. How we can avoid the risk? Put the preventive controls. Put some preventive controls. Like we can implement the policy of maker-checker concept to avoid the risk of fraud or mismanagement. The policy of segregation of duties. Designing the organization chart and defining the access controls. Taking the preventive controls, we can avoid the risk. Because this is the risk which is always present over there, and it may have negative consequences as well. But we must be able to understand that by putting these efforts or by bypassing these activities or this particular process, we can avoid the negative consequences of this particular risk. One more thing which we can do is we can establish some policies. We can establish some procedures. We can define some written manuals to assess the organization, to assess the team members, to access, to predict, to foresee the possibility of the risk and avoiding the risk of a particular process to some extent. Second thing is, if we believe that we cannot avoid the risk completely in this process, now think about accepting the risk. Basis of the quantum of the negative impact, materiality of the negative impact, we can say that can we accept that particular risk? Like I am driving from Jaipur to Ahmedabad and I am accepting the risk. Then somebody else can do accident. I myself will follow the rules, but somebody else can do the accidents, and I will accept this risk. Because nobody is safe in their home as well. Jitni सांसें दिए वो चलनी है. That means the process of accepting the risk. Third thing, we talk about controlling the risk. Risk control. So we put some directive controls, we put some preventive controls as well. We put some procedural controls as well. First, we have listed out the risk. We have gone through with the impact analysis. Now we are responding to the risk. While responding to the risk, we try to avoid some risk. We removed them. Now we try to accept some risk. Again, we remove them. Now the risk which is left with us, we will put the best possible controls. We will put our controls or controls. It can be either in the way of to detect the causes of the unwanted event, causes of the risk, detecting those causes, identifying those causes, and implementing detective controls. Same time, you can also put some preventive controls in the form of policies, procedure, and all, and identifying the root causes of that particular risk, unwanted failures, unwanted negative impact, and then training to your team members, guiding to them, helping to them to implement controls over there. If you are not able to avoid, accept, and control the risk 100% collectively, then what we can do, we can transfer the risk. That means transferring the risk of my company to another company. Is it possible? If I say, boss, there is a risk of responsibility towards customer, risk of this much amount for my company, so I want to transfer entire risk on your company. Is it possible? Somebody will accept it. Let me give an example of warranty agreement. Another example of insurance. Reinsurance. First of all, we are taking the insurance. For what purpose? I am taking factory insurance. I am taking marine insurance. I am taking cargo insurance. Why? I am just transferring the risk to the other company in lieu of some premium. That means insurance is transferring the risk. And what the insurance company is doing? They are taking reinsurance. So again, they are covering their risk, transferring their risk to reinsurance agency. And reinsurance agency is taking risk in return of the reward of the premium of reinsurance. Clear thing? Warranty agreements can also be considered sometimes in transferring the risk. Some companies, what they do, they make the sale and they give some warranties to their customers, warranty for 2 years, 3 years and all. But they don't undertake the warranty activities as their in-house activity. They do agreement with some other entities, other companies, and they say that on every product sold by us, we will pay you this much amount as a part of warranty fees. And now it will be your duty, your responsibility to provide the warranty to the customer for the period of 2, 3, 5 years, whatever the conditions may be. So sometimes the warranty agreements may also be the example of transferring the risk. Clear things? Now talking about the responsibility of auditor and responsibility of board of management towards risk management. Particularly if we talk about SIA 130, it says the ultimate responsibility of risk management, risk mitigation, risk management framework is on the shoulders of the board of management. The auditor is to responsible only about his proper working, proper documentation, and he has to ensure that he has done his work by following the governing principles of internal audit. That's all, governing principle of code of ethics. All other applicable rules and regulations, that is the responsibility of auditor. If there is thing which is material risk and auditor was aware about it, still he didn't report in his report, he didn't inform to the management, then management can claim to the auditor, boss, why we have appointed yourself. In that case, we are talking about internal audit. Now first, let us discuss about the responsibility of the management. Now come to the Companies Act 2013. Let us talk about Companies Act. In the Companies Act, it was clearly mentioned that the overall responsibility towards the risk is in the hands of directors, board of directors towards the risk management. If we go through with the clause number, clause N of section 134, subsection 3, and there was the particular phrase which was mentioned, that a statement indicating the development and implementation of the risk management policy for the company. That means we are talking about risk management company for the management policy for the company, including what? Including the identification of the risk and forming the opinion, the threats, thinking about the threats, opinion about the opinion on the threats. The entire process is the responsibility of the management only, board of directors only. This is their duty. This is the duty of board of directors to ensure that they are preparing the risk management framework. They are preparing such risk management policy, and they are identifying the threats due to such risk. They are taking necessary actions to mitigate such risk by using all the 4 parameters which we had discussed in the earlier slides. One more responsibility, one more onus on the directors regarding risk. If we talk about Schedule 4 of Companies Act, we will find that talks about some guidelines for code of conduct for independent auditors. So regarding independent auditors also, subsection 1 says, this is the duty of independent auditors to help to bring an independent judgment to bear on the board of directors deliberation, especially regarding the strategy, performance, risk management, resources, and all these things. That means code of conduct for independent directors also says that this is duty of independent director to ensure and to help and to tell the board of directors, the composition of board of directors about the risk. Subsection 4 also says that this is the duty of independent director to satisfy themselves that the integrity of the financial information, that means there is no misstatement in financial information, that is there. There is no such kind of risk of financial misstatement. This is the duty of independent directors as well. Now talking about responsibility of internal auditor. We have discussed about the responsibility of directors. Now talking about responsibility of internal auditors. What they need to do, and we can say the process of internal audit. in relation to risk management, we can define it as in this processes. Now, first thing is identify the possible risk, list out the risk, then understanding the material impact. First, I have listed out different kind of risk. Now I will understand the materiality of their impact. We can avoid immaterial risk, but we have to consider, we have to prioritize the material risk. So third step is prioritize the areas of importance according to their material impact. Now moving ahead, the fourth responsibility of an internal auditor is to, as per the nature and extent of the internal auditing procedure, that let us take an example. I have been appointed as internal auditor for the process of revenue only. So that is nature and extent of my appointment. And then another scenario is I have been appointed as internal auditor for the entire activities, entire operations. So in both the cases, my responsibilities will be different. So considering nature and extent of the internal auditing procedure, we have to list out the risk process and understand the frameworks. Next thing is the auditor's response towards the risk management framework. We will discuss in the next slide this one. And then comply with the requirements of all other SIAs. There is one essay as well in this matter. Essay 330. Essay 330 that talks about auditor's response to the assessed risk. That means we have assessed the risk, we have identified the risk, and we have assessed the materiality. Now, how we are responding to that. So, whenever you read SIA 130 regarding auditor's response toward assessed risk, please go through SIA 330 as well. Also, we have to fulfill the requirements of other SIAs. Let us take an example of SIA 110 as well, like nature of assurance, that impact on the risk management process. Also, we have to understand, being an internal auditor, we have to understand the importance and the process of designing and implementing the operating effectiveness. That means whether the operating effectiveness related procedures has been designed or implemented, and we have to go through with designing process and implementing process, and we have to comment on that as well. We have to review that as well. We can say DIOE, designing and implementing effectiveness of operating effectiveness. About what? About the risk management process. So these are the responsibility of an internal auditor. Now, auditor's responsibility, auditor's response, where the risk management framework is working, risk management framework is implemented. So what to do? When there is risk management framework is in place, the internal auditor will review the risk management system, the procedures for risk management, and he will evaluate whether these procedures, whether these systems developed are effective or are working in the efficient manner, and these can help to ensure the compliance of these frameworks as well as other compliance, like sir will discuss in SIA 150 as well. So the compliance of the responsibility towards the compliance as well, he will assess. Also, auditor will assess and list out if he finds any kind of shortcomings. So the auditor will highlight the shortcomings which are resulting into the recommendation which are to be provided by the auditor on the operating effectiveness and efficiency of risk management system and procedures and activities. Based on that, in this scenario, the internal auditor is expected, not bound, but internal auditor is expected to provide few recommendations, few suggestions to the management that how to make the risk management framework more efficient, more strong, and more result oriented. So that means if risk management framework is in place, the responsibility of auditor is to understand, to assess the risk management framework and all the procedures and systems, and to also to understand that they are able to meet the requirements of the various compliance as well, and the requirements of other SIAs as well. And based on their understanding, come out with the opinion and some recommendations and suggestions to make strong the risk management framework. In case there is no risk management framework, that means the entity is enjoying the life. जो होना है वो होगा. So in that case, in that scenario, in that thought process, what is the responsibility? What should be the action plan of auditor? In that case, the auditor need to highlight the significant exposure, significant risk arising due to weak risk management policies, due to lack of risk management framework. So he has to identify potential risk, potential exposures, and also describe little bit about the expected negative impact of those to the organization and the long-term impact on the organization. And based on that, again, auditor is expected to give some suggestions and recommendations to implement and strengthen the risk management framework. And what do I mean by risk management framework? Sir, the process undertaken by the company for the risk mitigation and risk management. That means risk identification, then avoiding risk, accepting risk, controlling risk, transferring the risk, and relating to these 4 activities. Whatever the policies and procedures, the manuals, the guiding force company has developed. Now, whether these guiding force and policies have been implemented properly or not, to overlook the implementation as well. So the entire process, entire document, entire guidelines can be considered as risk management framework. These are certain benefits of SIAs, more particularly SIA 130, and not only about SIA 130, 140, 150. A few months ago, on the same platform of IASB, I have conducted session on SIA 320 and 330 as well. So for SIA 320, 330 also. So all other SIAs, what are the benefits of implementing SIAs in the proper manner? First of all, these help us. These SIAs help an auditor to list out their audit finding, internal control related findings, their observations, identifying their observations and listing out their observations. Then supervision of their own work, like my team member has undergone any internal auditing activity, so I need to do supervision. So these SIAs help in the supervision as well. Then it also helps us to understand whether the procedures which we have followed regarding risk mitigation and all, regarding the compliance of SIAs, whether these procedures are adequate and sufficient or not, whether the evidence is obtained by us are adequate and sufficient or not, whether the documentation done by us is proper or not, whether the compliance about all other regulations is perfect or not, whether the governance related issues, governance related compliance have been complied with or not. So these help us to understand that. And also at the same time, such SIS helps chartered accountants to ensure that their work is being performed in accordance with the guidelines, pronouncement, technical guides, implementation guide, guidance note issued by ICAI. That directly helps chartered accountant in practice and engage in internal audit function. One more benefit, or we can say not only benefit, some suggestions, some things. After understanding SIA 130, understanding about such risk, some extra cares which an internal auditor is to consider while performing his duties, that is obtaining the sufficient and appropriate audit evidence. That is important. And then documenting such evidences. What happens to us? Being an internal auditor, I have performed my duties. I have discussed, I have performed the interviews, checklist and all, observation activities, analytical activities. I have done my activities in very diligent manner and I have come with some opinion. After some time, somebody raised question on my professional competency, on my professional responsibility, my integrity, my objectivity. How I can give safeguard to me? If I will say 2 years ago, I have put in best of my efforts, nobody is going to believe on my words. At that time, my audit file, my documentations, they are going to provide safeguard to me. And my documentation, It will provide the level. It will show the level of the activities which I have undertaken to ensure the risk mitigation, to ensure the risk control, towards the risk in the entity, to understanding the environment of the entity. So this documentation will tell us the level of my activities performed. So at the time of this documentation, we have to take care about the quality of the document as well. That means any evidence which I have obtained, there is a risk of manipulation in bank balance. I ask client, sir, I need to confirm your bank balance. And client said, sir, our managing director will give you bank balance confirmation. MD is ultimate authority in the company. MD is giving the letter. He is giving management representation letter. I say 580. So I am very much happy. Okay, yes, I obtained that confirmation letter, management letter regarding the balance confirmation of bank. That is completely inappropriate. That is not sufficient audit evidence. For the purpose of banking, what I need to do, it should be confirmation received directly from the bank or net banking, screenshot of the net banking. That should be documented in your file. That should be documented. That is one example only. So quality of your evidences, quality of your procedure followed by yourself, that is important, and documentation of that procedure followed by yourself, evidences obtained by yourself, the proper documentation is to be done. The sources of the evidences, these are always to be reliable, always perfect, and the possibility of manipulation should be max to 0. And all such evidences, all such work papers, all such written work papers, written documents, representation letters, the procedure followed to obtain these evidences, it should also be documented. Like being an internal auditor, I took engagement on this date. These were the team members who were engaged in the process, and we have performed our activities so and so. These are our observations, these are our findings, these are our documentation. So list out all these things. These are the duties toward the risk management by the internal auditor. This is the last slide. I will sum up in next 2-3 minutes. Then we will move to Nayan Kothari sir. He has to cover 2 SIAs. So we will learn a lot from him. And either we can take questions now as well as maybe Anahita ji may suggest. Anahita ji, we can take
in the end,
now?
sir. In the end.
Okay.
Anji.
I will be in entire session because I love to learn from Nayan Kothari sir. So we can take the questions at the end as well.
So otherwise, as you say, we can take up questions now also.
At any time, but I will be in the session for the entire period, and I will listen and answer very carefully.
Okay.
There are 2 examples, 2 screenshots on this screen. In first one, there are certain cards, debit card, credit cards. Second one is Paytm. Now, let us take an example of 10 years ago. 10 years ago, most of the transactions, most of the shoppings, either we people used to do in cash, even companies were giving cash on delivery, or we people used to follow the net banking procedures. Or if I am visiting a showroom and if I am purchasing a laptop or anything, either I will pay in cash or I will draw a check. 15-20 years ago, it was my mindset. Somebody else's mindset. Then thereafter, somebody thought that there is a risk of theft of the cash. There is a risk of losing the signed check as well. There is a risk of wrong payment in the net banking just because of putting wrong 1 digit incorrect in the bank account number detail. So there were certain risk in the net banking as well. There were risk in issuing check. There were risk of carrying the cash. 5 lakh, 10 lakh rupees cash I cannot carry. So somebody thought, and understanding the risk which is being faced by the businessman and the customers, somebody came with an idea of credit card and debit cards. Now, I don't need to carry cash. I don't need to carry checkbooks. The people have provided POS machines to the showrooms. I will just visit to showroom. I will purchase my laptop, and what I will do? I will just swipe the card. That's perfect. I will just swipe the card and payment will be made. That's really good. Now, there was the situation of demonetization 6 years ago. Before that, Paytm tried to implement such barcode system of the payment. But once the demonetization was implemented, now the cash transactions were very few in that space. If a vegetable seller is selling vegetables for 2,000 rupees, 3,000 rupees in the entire day, 20 rupees, 30 rupees, 50 rupees to each customer. If being a marketing guy of that card company, if I visit to the vegetable seller and I suggest him for the POS machine, is it possible that he will agree to take the POS machine by depositing 10,000 or 20,000 rupees or 50,000 rupees as FD in the security of POS machine? He will say, no, bhaiya, rehne dijiye. So the alternate of barcode scanning, boss, you don't need to give anything. Just put this barcode there. Person will come, he will scan from their mobile and the payment will be made in just fraction of few seconds, even without charging any additional amount. So from cash to net banking, from net banking to card payment, from card payment to barcode scanning. That is the continuous process. And in this process, the innovator, they not only considered about the risk of businessmen, but also they consider the risk of customers as well, the requirement of customers as well. So while we understand the risk process, at the same time, what the customers are, what the other factors, we can say other stakeholders are doing, what they are expecting. So that those factors are also to be covered, to be considered. Thank you from my side. I have covered SIA 130 and over to you, Anaitaji. Now we can move for the answer. Yes.
Thank you so much, sir, for such a great session. Thank you so much, sir, for explaining all the topics in such an interesting manner. Now, I would like to invite C. Nayan R. Kuthari, sir, for our next session on Standard on Internal Audit, SIA 140, that is governance. C. Nayan R. Kuthari, sir, is a practicing chartered accountant based at Baroda since 2006, partner of Manoj Vipin and Company Chartered Accountants, regularly delivering lectures and seminars at various professional bodies, regular faculty at orientation courses, MCS courses, career counseling programs, and certificate course on concurrent audit of banks. Sir contributed as a managing committee member of Baroda branch of WIRC of ICI for the past 8 years and presently. Sir also served as chairman of Baroda branch of ICA for the year 2014-15. Sir is member of various committees and visiting faculty at various reputed institutes. Now, over to you, sir.
Namaskar. Good evening to you all. Respected Nandaji, Nyanchanji, Chairman of the branch, Anilji, Moderator Madam, and my very good friend, Brother Dheerajji. It's good to be virtually at Chandigarh today for the sessions on the bank audit. I think virtually I was there last year, and for the sessions on the concurrent audit, probably 3 times physically I had been at Chandigarh. So again, it's always pleasure to be here and being part of the league called the internal audit. And now earlier, few years back, it was CIA, Committee on Internal Audit. Now, as Dheerajji mentioned, our beloved Nandaji is the founder, chairman of this board. So, converting a committee to the board itself shows the magnitude of the subject, friends. Statutory audit, even today the team is working there and complying the entire work of the statutory audit at my and your offices, friends. But the great value addition parallelly has been evolved, contributed by our fellow members to the management is through the internal. That fact has come up formally and informally in both the channels, and internal audit to a larger extent has come out as one independent branch of the professional practice, friends. And to support that, to help that, to guide the members doing that, the standards are coming up. Whenever I talk to the students, I always ask about one word. Friends, what is standard? Standardization, if I talk about, what's the first example comes to your mind? I always give one simple example of the standardization is one pin charger serving to all mobile phones except one or two. Earlier, 10 years back, every mobile company used to have a separate charger. Now I follow one yardstick. Reason? What would have been the harm, or what the ease has been there due to having different chargers or one charger? And charging is one simple act, one simple procedure. Let it be standardized. But the substance I want to give over the form, the quality of the auditing I want to give over that, let that have the individual touch of the person doing it, but let that must have the basis standard assurance of the quality which a chartered accountant will follow, and that basis, that basic standard assurance of the quality, a basic guiding force to us, that is readily available, nicely drafted and crafted, the standards on internal auditing. Friends, whenever we discuss with Nandaji or any other officers of the board, there is always, a complaint that very less number of the comments are coming to the exposure draft. Dheerajji would certainly agree to me. And when the standard is notified, all the members will talk about, oh my God, there are another set of the standards when we will read, or there it's lengthy, it is not having this, it is not having that. But friends, we should be little bit aware and spending time when the exposure draft comes. And with the social media, with the WhatsApp and everything, the exposure draft is also being circulated into the large number nowadays. If you are missed out to see the email through WhatsApp, through this, through that, I would come across the exposure draft. Try to read it once. Sir, these are one of the very simpler and the simplest forms of the standards ever available. I had gone through the international standards also and everywhere. But this is going on a very nice and chronological manner. The way the last slide or last slide about the format, the framework which Dheeraj used, that similar concept even used in 150, 140 and various other standards when the auditor will have to report as per the framework not provided or specifications to be given. These three last steps are common. Friends, that is what the standardization is. If I catch hold of any standard, its format, 1, 2, 3 steps, how is it going? Generally, any standard you may pick up, if it is SIA or even the essays, definition, objective, procedure, conclusion, with a specific emphasis on documentation with Dheerajji mentioned. These are the broader, framework will always come across in any of the standards. So friends, I'll take 1 minute how to decode the standard. Read the objective and applicability. Applicability की तो बात करना ही नहीं है. If it is accounting standard, then we will talk about the applicability. Standards on auditing, standards on internal auditing. Whenever I am doing the audit, they're applicable. Simple. Then the objective and definition. Friends, one word would have been defined in the law, regulation, standards by the regulator different. So which particular definition shall I be picking up for the purpose of the subject and object of the standard? Then the standard will further may give you the procedures like the standard on auditing, which talks about the documentation, which talks about the audit evidences. It talks about the method and procedure of what? Achieving the objective given in paragraph. Then the definition. Which meaning should I pick up over here? Then the procedure. This meaning and this objective, how effectively can be achieved by following a particular procedure. And whatever I keep on doing, I keep on writing. That's what is my documentation, which will serve as, or which will only serve as rescue to me when I have to answer, boss, I have done the work with you. Then the presentation. If I talk about the standards on auditing, it would be purely as per the requirement of the law, regulations, or the reporting. Here, it would be as per the framework. That is what is the mutamoti interpretation regarding the reporting can be done. Friends, reporting could be this much or this much. It could be a small, large, smaller, greater, do not know. But my documentation, I warn you again, my documentation should be sufficient. Reporting shall be as per the framework, not as per the framework, as per the specific assurance, whatever. But my documentation should be sufficient enough, whether it's being done by me, whether it's being compiled by my team, whosoever does. So that's the one simple, note on which I would like to start the presentation. I'll just share the standards, the PPT on the standards. I've not, made them that nicely and beautifully as Dheeraj has, designed it well. I've just tried to cover the entire text of the standards paragraph wise into the PPT. Depending upon the availability of the time, we would be reading them to the extent possible. Kindly read it as a September 19 instead of, the date has been, taken up somewhere with the printing mistake. Kindly read it as September 17 instead of 9. I'm sorry for that. Now, this is what is the background of the board and everything, which Dheeraj has already dealt with. So I shall not get into the details of that again. Just adjust this. Importance, as I so SIS, they are issued under the authority of the council. Little more formal word, standardization, which I gave you, codifying the best practices in the areas of the internal audit. Whatever best available from everywhere, it's being codified over here and creating a benchmark for the performance of the internal audit service which we are providing. That will give guidance note as well as the clarification as well, scope. The standards on internal audit shall apply wherever the internal audit is carried out. As a matter of repetition also, I am reading this out. Whether you are an independent internal auditor or part of the internal audit team, this is going to be applicable, or rather, I'll say helpful in conducting, our auditing. Further, that's an independent management function that will involve continuous and critical appraisal of the function, which involves functioning of the entity with a view to suggest, improve, and add value for strengthening the overall governance mechanism of the entity, including the strategic risk management, which we had just dealt. Friends, internal audit, we used to predominantly think as a khana purti checklist. Yes, no, don't know, you don't have the options, so you cannot write it. But when it comes to yes, no, whatever I miss out on, giving these suggestions for the improvement. And that point should, at this point of time, I would like you all to take a note of that. Dheeraj talked about the risk, and he also gave one example. Risk is something, a subject which would be close to any of the auditor. So I would also get in, before into the subject proper, we'll take one example of the risk, which I generally used to take always. There is a risk as well as what you call it as the reasonableness, or the how much, this cannot be zeroed down, that we all know. So you would be having one answer into the standard, it can be reduced to an acceptably low level. So what would be my acceptably low level? For example, after the session gets over, I need to go home and pick some vegetables. So at that time, I am buying a potato, and that gentleman is paying the potato. At that time, 525 grams or 550 grams, it's going to make any difference? No, he's not going to put the potato half and will give exact 525 grams. I'm talking about the street vendor, not that superstore. Now, on the same time, admin asked on this Saturday evening to do some shopping of the precious metal called gold. So 25 gram will not be the total budget to buy. It would be going into the milligrams, and that entire weighing scale would be into the glass box. And they'll see that due to this fan or the air conditioning, also a little milligram of this weighment does not get affected. So depending upon the materiality, my acceptable level of the risk would, kind of differ. Okay, coming to the standard which I have to take, the governance. what do we understand the governance to be before getting into the definition of the standard? How do I govern my entity? How do I means the management, board of directors, those who are charged with the governance of the entity. Simple. How do they govern this? Of course, they need to govern it into the best possible way so that the money from the stakeholder, or sorry, from the investor and the benefit to the stakeholder can be taken care of. Obviously, that's what the governance or the optimum governance practices somebody would expect. But that's the ideal situation. They'll keep on going on that track. Sometime little bit here or there from the track might happen due to any of the external or internal event. External event, okay. Internal event, I need to take care. How would I take care? My internal control mechanism, it's a big organization and number of the document. My internal control mechanism still runs, but I require one additional mechanism in my internal control mechanism through internal audit. So governance primarily responsibility of management. Internal auditor will see to it whether it is being done in the proper efficient manner or not. If not, he will report. That's the very simplest way before we get into the reading of the definition proper could be with respect to this standard, right? I'll, depending upon the time, try to read also, as well as major discussion would be on the elaboration. So governance, the standard is issued, date is yet to be notified, but approved and came into the public domain. Governance. That's a key concept I mentioned, right? That's a very key concept in the internal audit, and the standard seeks to clarify the concept and responsibility, meaning definition and responsibility of internal auditor, management, board of director, audit committee, and every other stakeholder coming into this procedure. With respect to what? Governance. How? Keeping in mind their legal, regulatory, and the professional obligation of this KMPs could be the management, BOD, or audit committee. Let's get into the definition of the internal audit. Framework governing the internal audit that indicates providing independent assurance on the effectiveness of internal control, risk management procedure to exchange the governance and achieve the organizational objective is a key expectation from the internal audit. Overall goal, in the process of achieving the overall goal, whatever control, risk, effectiveness, everything is to be measured by the internal auditor. This definition in the internal audit elaborates on the term governance by clarifying how this is critical operation of the company, fulfilling the expectation of the various stakeholders. Standards shall apply to all the internal audit conducted where governance activity and framework is subject matter of the audit, which is being assessed, evaluated, and of course, to be reported by the internal audit. So governance ke upar, keeping the governance as a subject matter of my internal audit, or maybe as a part of one part of the entire internal audit which I do carry. When I have to make a comment as an internal auditor, of course, after assessing and evaluating, the procedure set up here in this standard shall be applicable, shall come into play. Purpose, providing the common terminology, as I've already mentioned, on governance. Why? To prevent ambiguity and confusion on this subject matter. The entire subject matter around which the discussion would move on, that should be given a very clear meaning. Point number one, meaning. Point number two, the purpose, responsibilities of board of director, management, audit committee with regard to the governance, which is set up by, given by, mandated by, compulsorily mandated by law and regulation, which would have appointed this BOD, audit committee, and every other stakeholder. But we are reading this as a part and purpose of internal audit. So definitely the standard shall have specifically defined responsibilities of the internal auditor when he is providing independent assurance on governance framework. Overall objective of the standard is to clarify the responsibility of management, audit committee, BOD, internal auditor towards various stakeholders, both internal as well as external, and requirement which need to be met to assess, evaluate, report, and providing independent assurance to the overall governance framework. Okay. Last line, you may read it again on your own. First 3 point, 1 minute quick repetition, meaning responsibility part A, management part B, auditor. So these three points are predominantly to be covered in this particular standard. Meaning part number 1, as I said, they very clearly said why they want to define, why they want to give meaning to avoid the ambiguity or confusion on the subject matter. If the subject matter is not been defined well, not been understood well, if the ambiguity remains around it, then there would be some danger. That's the reason they want to clarify it to a larger extent the meaning. So let's read that. Governance is defined as a set of relationship between the company and the various stakeholders. It could be internal as well as external. Internal stakeholder, their employee, external stakeholder, the investor, the banker, and who not. And they provide a structure through which companies' objectives are achieved. It's not only defining this, but giving a structure, the relationship structure to help to guide the behavior of individual in the group in the right direction. This is well accepted and drippings of the good governance. What are expected from a good governance, or when it can be said to be good governance? When it has got integrity and accountability, trust and equity, and whatever you do, you have got transparency. Governance also want to ensure that everyone who is aligned to the best interest of the organization, doing what they are supposed to do for achieving the organizational objective, and the governance framework refers to the whole structure, system, procedure to put in place to organize the various governance activity to integrate seamlessly into the organization. You can have a great framework, you can adapt it, you can copy it, you can develop it by engaging and involving an expert. But important thing, the important word is to integrate itself. How? Seamlessly, easily into the organization. Then only this framework which you have developed, borrowed, copied, engaging an expert or whatever manner will give you the benefit. What all activity shall be forming part of this framework? Defining, having a paragraph is good thing, but we must have the list of the things of governance activities. What are included here? So, what is included into the governance activity? Why they are designed? To enhance the organization's ability amongst the others, providing strategy, leadership, direction, providing nature, a culture of values and ethics, sensitivity to multiple stakeholders' interest, not only my employee, not only my shareholder, not only my bank, but all multiple stakeholders, those who are attached to me, I need to be sensitive towards them. Promoting a collaborative decision making, not one man show, as Dheerajji said, MD says that's a bank statement or this is the bank balance. No, the responsible person will give it in a responsible manner and procedure, and the decision making will not be a one man show, but a collaborative of every stakeholder or every responsible person and department. It will provide structure and design to the organization's resource and the deployment. Friends, resources is something which would be always scared. Or if they are available in plenty, but my resource money would be scared to buy them. So resources management is the largest area or the challenge management. So managing these resources and their deployment, preventing undue concentration of power with the few. I already narrated this into the decision-making point. Encouraging risk-based prioritization, consistency and efficiency in the business processing, risk-based processing. Dheeraj already took up this. Support resource development in the area of the good governance, exercise judicious monitoring and oversight on business and individual performance, and ensure full and transparent communication and report. These all activities are generally forming part of ELC, entity level controls, which are essential to overall internal audit agenda. Friends, the standard itself has included the short form in it, so that later on informally some short form is coming up and we people are trying to decode it, that situation will not come. At various places into the standard itself, they had been, having the full form, short form thing. So here it is very clearly mentioned that word ELC, entity level control. This 3 points ABC has been elaborated here by giving the various elaboration and the inclusions to be there, forming part of governance activities. Now, step 1 is over. Definition and meaning. Introduction, objective, definition and meaning. Now, what all has been defined to be a good governance activities? Who are responsible for them? And whose responsibility includes what? Who are responsible for them and whose responsibility includes what? That need to be understood, very well. That requires to be understood very well. So, just remove this video. Just okay. So the responsibility of first board of director. Board of director are who? The top governing entity of the company. They would be primarily governed by the Companies Act, obviously. So the responsibility of the board of director, in addition to all this, ethics and transparency and all what we have learned, the primary responsibility would be fixed up by the law and regulation governing the same. So responsibility of the board of director where governance. We should not miss out what we are reading. We are talking about the governance. So in the area of the governance is generally established by prevailing law of the nation. The responsibility of the management is to establish by both prevailing law and oversight of board of directors. Companies Act imposes overall responsibility of the BOD with regard to the governance and specifically towards the company's stakeholder. Overall, and secondly, responsibility towards the stakeholders of the company under section 166. What does it define? What does the section include? So the director of the company, here is clearly mentioned, legal provision I'll read out as a part of the standard. They've incorporated it over here, the section 166. The director of the company, subsection 2 of 166 to be very specific, a director of the company shall act in a good faith in order to promote the objective of the company. Why? For the benefit of the matters, for the benefit of the members as a whole, and in the best interest of the company itself, to the employee, to the shareholders, to the community, and for the protection of the environment as well. So that is what is the duty defined under section 166(2) of the board of directors. More specifically, again, schedule 6 of the Companies Act on the code for the independent director, section 1 also talks about the guidelines of the professional conduct for whom? Independent director. What does the clause 9 reads over there? They are required to assist the company in implementing the best corporate governance practices. So the board of director in general, independent director in particular, are responsible, required to implement the governance in the best interest of the company and its stakeholder. Further, listed company, LODR, another full form short form game is here, listing obligation and disclosure requirement. So LODR 2015 has already given the following responsibilities to the board of director with respect to, again, governance. Key function of the BOD, close to monitoring the effectiveness of the listed entities governance practice. If they are not up to the mark, make a change if needed. It does not stop here. It says, in addition to, and under the same regulation, it states, other responsibility to be, the board of directors shall set a corporate culture, values, which executives throughout a group shall behave. Further, the LODR Schedule 2 is also mentioning certain requirements as to the corporate governance. Yeah. So for the listed entity, LODR further will give you the exhaustive list. Corporate governance, which will stipulate the various requirements of good governance. What are these requirements? Part C of the section A is defined them that audit committee shall include the following. What they have specifically mentioned under clause 12, 13, 14, and 15. Reviewing with the management performance of statutory and internal auditor, adequacy of the internal control. Further, they will ensure discussion with the internal auditor and significant finding to follow up on the same. This we are talking about for the independent director and audit committee, but specifically with respect to the LODR, which is applicable to the listed entity. Reviewing the adequacy of the internal audit function, if any, including the structure of the internal audit department or outsourced, minority, and official who is heading the department, and reporting the structure, coverage, and frequency of the internal audit, either covered internally or done by an external auditor. Discussion with the internal auditor of significant finding, follow-up, reviewing the findings of an internal investigation if required, which is done by the internal auditor into the matter where they suspected fraud. Regular internal audit you review, but now you are reviewing internal audit investigation into the suspicious area they have done, or some irregularity they have found, or they found failure of the internal control system on certain material fact, and they are reporting this to the board. That was part C. Now part C, further section B, the audit committee that will mandatorily review the following: board, independent auditor, requirement of the LODR in case of the listed entity. Now the audit committee. Again, they will talk, review the internal audit report relating to the internal control, weaknesses if any, and the appointment, removal, terms, remuneration of chief internal auditor shall be within the purview of the audit committee. You know, it's not the management function. It has been entrusted to the audit committee, and they are trying to make this much independent. They are trying to make this much independent, right? Further, the governance is seen as the essential element of the business. We are concluding here regarding the responsibility, and again the governance, functioning, internal audit as a key element of the governance, and therefore the overall responsibility of developing, implementing, and monitoring the governance framework again rests with board of director and the management. Entire responsibility to have a good governance lies with whom? The BOD and the management, right? In three parts, having reference to the different places or the law, regulation, etc. We had gone through the requirement of the same, and ultimately concluding where a good governance. We started with its objective or the good characteristic, again concluding on the same and making the responsibility regarding the same clearly with the management, board of director, etc. Now, in this entire situation, in this entire procedure, there is also the internal auditor. There is also the internal auditor. What is his responsibility? Before I get into the responsibility of internal auditor, it goes as Dheeraj earlier explained in 3 parts, where there exists formal governance, where no formal governance framework exists, or third situation, where you are required to do audit and give specific opinion on the governance. In 3 situations, the role of the auditor, the responsibility or the working of the auditor would follow. First, when there is a framework in place, right? The nature and extent of the internal audit procedure we conducted in the area of the governance is depending upon the framework in place and maturity of the process, whether the framework is only in place or maturely, properly implemented, integrated, and the process is there in place or not. Whether the management has implemented the formal governance framework unless specifically excluded from the audit scope. If it is excluded from your audit scope, you need not to worry. But if it is not expressly included, by default, it becomes part of our auditing. Right? So unless expressly or specifically excluded from your audit scope or technically not feasible, the internal auditor will plan and perform the internal audit procedure for evaluate what? Designing, implementation, and operating of effectiveness of such framework so as to provide what? Independent assurance to the management and those who are charged with governance. Ultimately, auditor has to give one assurance comment regarding whether the framework is proper or not. When he can say the framework is proper, when it is giving the desired results, when the framework would be giving desired results, when it is designed well, it is actually implemented, not on paper, and in day-to-day activity, day-to-day decision making from top to bottom, bottom to up, every level, it's being in the right and spirit followed. Then that framework will certainly give the desired result. Auditor is required to check, evaluate the designing, implementation, and operation part of this governance and specifically report to the management and those who are charged with the governance. What does the design, implement, and operated can be given in an example? See, when I'm buying a ready-made cloth to a person of the normal, regular fit, he can buy it. But when you want a very specific nisha, the wedding sherwani, you would wish it to be designed well to fit on you, right? So this governance mechanism also should be designed in such a manner and method that it suits, fit properly to the organization. I cannot copy paste that. Some governance mechanism of X company will not fit well to my company. So that is what, according to me, friends, the designing is. Implementation, not merely into the rule book, but actually integrated, earlier we have seen that word, into the procedures and operating effectively. Today, the Mantriji is coming, the road, everything is neat, clean. Tomorrow, not. No, that's not proper implementation. My implementation should be around the year, 365 days. Then only this governance will give the desired results. Okay, that is auditor's responsibility, point number 1. Which one? There is a governance in place. Framework is in place. Second situation, para number 6.2. no formal governance mechanism framework exists, then auditor shall design and conduct the audit procedure with a view to highlight any exposure arising from either a weak or no absent of the governance activity and process, make recommendation. Earlier the framework was there, I comment on the framework. Framework is not there, I'll recommend to implement and strengthen such procedure which will implement and improve the governance in future. Right? So there is a governance. What would be the responsibility of the auditor? There is no governance. What would be the responsibility of the auditor? Further, where the auditor is required to give independent assurance, the issuance of an audit opinion on design, implementation, and operating effectiveness of the governance. It shall be undertaken in line with the requirement of SIA 120, which was even in the earlier discussion was referred, that talks about the nature of the assurance. In this para, it was mentioned, if it is expressly excluded, I'll not touch upon this, otherwise I'll touch upon. This para tells about what expressly you are asked to give comment on the governance. Then you will be taking it up as per the nature of assurance defined in SIA 110, especially with regard to the need to have formal governance framework should be in place, which shall form part of the basis of such an assurance. Clear? Now, exclusion. What is not my responsibility? The internal auditor shall not assume any responsibility to manage or operate the governance framework. It's a purely responsibility of the management board or those who are charged with the governance or maybe the audit committee. I'm not there to run the framework. I'm there to evaluate the framework, giving suggestion to strengthen the framework. Right? So auditor shall not assume any responsibility to manage or operate the framework or to take governance related decision. The focus of the audit procedure is on the process of governance and not on the outcome of the process, such as second guessing or questioning the action or the decision of the governing bodies. It is not the responsibility of the internal auditor to execute or resolve governance related risks. That's purely responsibility of the management. I need to evaluate whether it is giving the desired results or not. How? I will be getting into the auditing of the same. That is given in the last para of the standard or second last para of the standard, that's para number 6, that talk about the explanatory comments. It has been defined, auditor will have this responsibility, but how he can have this? So, auditing the governance framework, where there is a formal governance framework in place, work to be performed by the internal auditor shall be directed amongst the others as follows. Organization has designed the framework, whether it is consistent with best in class or globally recognized framework or not. So step number 1, what the auditor will check as an explanatory comments given in the standard procedure given in the standard, the governance framework is best in class, proper or not. Second, the organization has implemented various enabling mechanisms. Which mechanisms have they implemented that I need to check? They are shared organization vision, mission, objective, goal, and targets, established a code of conduct on ethics, to whom whistleblower, those who are leaking certain secret information of the company, acted to identify and address the concern and balance the need of the various stakeholders, maybe internal and external, as we had been seeing from the beginning, through good communication, open communication, and the decisions. They are further required to form active and functioning governing bodies with the defined agendas. So this is serving as a explanatory comments or a guidelines to the auditor while auditing into the governance framework. Further, they'll be checking the shared organization design structure with a clearly defined role and responsibility of every position, how the powers are delegated and authorities are given, whether it is documented through a formal document or not, and that document must be approved by the board. Then deploying the risk-based system process, which is deploying the same where possible, whether the technology is nowadays serving as the foundation or not. Conducting the regular training program to develop the staff awareness, competency in the area of the governance by the management amongst the entire human resource of the company. Continuously tracking the business performance against budget and goals with adequate review, oversight mechanism, and undertaking the active communication and periodic reporting from the governance matters to those who are charged with the governance and other stakeholders. Friend, whether we read this all 10 points or the summary, ultimately it's talking about the ethics, communication, involvement, and clarity. And that entire designing should be done keeping in mind the state that everything auditor need to check, because he's doing this audit in part A where there exists a formal governance mechanism. The internal auditor will review the governance system and procedure in place to evaluate. Again, the same thing, whether they are operating. When can I say they are operating? If they are giving the effective desired results, operating effectively in an efficient manner and helping to ensure fullest compliance. Any shortcoming shall result in recommendation where I see them not operating effectively, where I find certain shortcoming in them. Then what would be the duty of the auditor? It would result into recommendation for improvement, suggestion on how to make the governance framework more effective so that it will give the desired result, to make it more efficient and effective in line with the stated objective. Unless and until it will effectively operate, it will not give the desired result and the stated object. Further, auditing in the governance activity procedure. Further, where the management has not implemented any formal governance framework. Framework was there, framework is not there. Internal auditor will conduct audit procedure over the various governance related process activity which may be present. This activity may be support to certain enabling system, procedure, and which may recommend as desired action to be undertaken by the management to establish the framework. Here I'll be giving a recommendation for establishing the framework because the framework is part A, framework was there. I was evaluating the effectiveness and efficiency. Part 3, separate independent assurance over the governance framework. In this situation where a written assurance report is being issued to the internal auditor, he shall consider the following while forming the opinion. This point number A, B, and C shall be the basis of opinion of the auditor when he would be giving a specific report on the governance framework. The linkages of governance framework with the other frameworks such as risk framework, which Dheeraj explained, compliance framework, framework related to the fraud identification, information technology, etc. So whether there exists a linkage or not, if not, it's not integrated one. You are talking about governance, other department or other framework are not having a linkage. Second, system of the compliance certificate on the governance matter. How and in what manner the compliance is documented. The procedure in place for self-assessment by every internal stakeholder or the employee and certification of the governance owner as a part of the continuous system of the compliance. The individual at the bottom level or maybe a team will give the self-assessment, and to who is the owner of the team, who is the responsible for that entire team's performance, that person, process owner, shall give a certificate of the same, who is the governance owner, and below people to them are going to give a self-assessment and whether the system is there or not. Accordingly, I would be giving opinion, independent assurance on governance framework. Right? So in this 3 manner, auditor shall go ahead with respect to giving the auditor's observation with the government. Very quickly, object to have good governance. Responsibility, management, audit committee, board of director, as per the Companies Act, as per the LODR in case of the listed entity. Auditor will see if it is there properly or not. Three situations: framework exists, framework does not exist, and where he is required to give a separate independent opinion on the same. So this is what is the standard all about, which has been already notified. Only the date is required. And I really compliment the board as well as the branch and all the participants here, those who are actively, participating in reading these standards on internal audit. So with this, I come to the end of my first standard very well on the time. Now, as I have gone through certain terminologies into the greater detail, not will required to be repeated when I'll get into the next standard, which talks about the law and regulation. See, I'll just take a base of or a reference of SA 240 if my memory goes correct with this number, which talks about the consideration of law and regulation by the independent auditor while doing the check. Here, in different way, as a part of your internal audit team, how the auditor shall comment, check and comment on the compliance with law and regulation. Again, in the similar manner, we will go. What is the law and regulation definition, meaning who are the responsible for the same, and in what manner the auditor shall conclude the same. So governance, of course, we have studied it in the earlier standard. That's the key concept in the internal audit. Right? Compliance is the key concept, not the governance. We are talking about the law and regulation. It's a printing mistake here. Not this word has to be read as the compliance, not the governance. That's why I just took a pause here. Compliance is the key concept in internal audit, and this standard seeks to clarify both concept and responsibility of, again, the same set of people: internal auditor, management, stakeholder, and all of them with respect to CLR, compliance with law and regulation. Right? Definitions: framework governing the audit that indicates providing the independent assurance on the effectiveness of the internal control and risk management procedure to enhance governance and to achieve organizational objective as key expectation from the internal auditor. And this definition of internal audit elaborates not the governance but CLR, compliance with the law and regulation, and it shall have the same scope. Now, the purpose of the standard. Earlier was some mistake. That's the governance introduction has been taken up, but it's more or less the same. Instead of the governance, we need to read the word CLR, compliance with law and regulation. Rest entire terminology is remaining the same. Now, further, purpose of the standard: providing a common terminology and meaning to what? Governance. Here there has been some ambiguity in this. I'll take another text only to just avoid that ambiguity. First one, framework, which I mentioned. Then common terminology, and this word I was referring to, this thing, CLR, compliance with the law and regulation. That is the objective with this thing. Now we will get into the same manner. What is the law and regulation, definition, responsibility, and auditors, right? So with the background of that governance standard, this will become little easy and speedier for us. So objective, providing a common term, defining the compliance term to prevent the ambiguity or confusion on the subject, explaining responsibility of the same thing, board management with regard to the compliance, which is mandated, compulsorily required by the law and regulation, and specific responsibility of the internal auditor, especially when providing the independent assurance on the compliance framework. Overall objective of the standard is to clarify responsibility of the management and auditor over CLR, compliance with the law and regulation, and requirement. How would I do this? So there would be requirement which need to be met to assess, evaluate, report, and provide independent assurance as to over the compliance framework, right? Definition. So here, compliance, the word compliance, that the term used to describe the process of the following, just not following, but in the letter and spirit, the applicable law and regulation. Any act contrary to the laid down law and regulation, either through omission or commission, and performed intentionally or unintentionally, is a non-compliance or a violence. And what would be the effect and impact of the non-compliance and violence of the law and regulation? Fine, penalty, litigation, or any other such consequences. So any law which is time being enforced required to be followed in its right and spirit. That is the particular, a one-line definition or the summary of this point number one. Point number two, compliance framework. The way you have got the governance framework. Here, what framework do we have? Compliance framework. That refers to the whole structure, system, process which are in place. Why? To organize the compliances, activities, and again to integrate them seamlessly into the organization. Exactly the same thing which we see in the governance. Here, you have got the law and regulation need to be complied with. There has to be activity, procedure, and that all integrated into the organization. What could be the compliance activity? They are forming part of the framework, are designed to enhance your organization's ability to, amongst others, to provide strategy, leadership, direction on the compliance. Strategy, leadership, and direction. One need to have an overall culture of the compliance throughout the organization. There are a set of law-abiding people and there are casual people. So you need to have an evaluate from bottom to top to bottom, a good culture where everybody would like to be law-abiding community. They are providing the organization structure for assessing compliance, resource, defining their roles and the responsibilities. Further, a culture to maintain comprehensive database of all compliance requirements. Encourage risk-based time prioritization, effective completion of all compliance requirements. Because if I do not do time-bound compliance, due date compliance, it would certainly result into at least the fine and penalty, if not litigation. If I do not comply with it at all, of course, the litigation and maybe up to the prosecution, the things would go on. But even if not meeting the deadline, would result into the small to a large financial loss. So I need to encourage prioritization, keep it into the reasonable risk category that non-compliance of this would impact on the financial risk, right? And this kind of the penalty, etc., into the revenue laws like taxation are disallowed. So that's another bigger risk, not only an expenditure being done, plus that expenditure will not be tax deductible. So accordingly, its risk need to be identified and priority to be set up. And that is what is, according to me, the compliance framework designing is all about. How? Ensuring the expertise and competence in the area of the compliances. Once with the proper expertise and with the help of the competent people, I have defined this more or less, it is going to remain the same until and unless there is going to be some change into the legal requirement as to compliance, right? Exercise continuous monitoring and oversight on compliance completion. It has to be, culture has to be developed, integrated. Everybody is being encouraged to comply with the same. Take the help of the expert and ensure continuous monitoring over the same. Then periodic communication of the compliance matter and formal reporting of the compliance status to the management shall be done. And of course, to those who are charged with the governance of the entity. That's the meaning of, the compliance or the compliance framework. What does it all, what will it all include? Then the responsibility part. As we have seen, the responsibility and other part in the earlier standard at length. So we would be little quick in this, but mainly the definition. The way we have taken up here the definition of governance, and similarly the list of activity in governance, these are the list of activity in the compliance. CLR, to my knowledge, includes largest ethical, good compliance with every law and regulation. Those who are charged with the management should know the law and regulation. Sir, they are certainly going to know it. But the implementation procedure to be done by the people at the bottom till the top, fire safety or the regular safety, they know the law, but it has to be implemented by the person, those who are there at the bottom level, the security officer and the person at the factory gate who will not allow anybody without the safety shoes into their feet. So that environment and that compliance risk based, if it is not done, what risk the management is going to face, and based on that prioritization to be done, taking the help of the expert. And this is a continuous thing, right? And its communication periodically to be done with those who are charged with the governance and of course the BOD. Now coming to the very typical requirement or the responsibility part. First, responsibility of the BOD, then the audit committee and the auditor. In a similar fashion, we will go. Board of Directors' responsibility here largely been defined by the Companies Act and SEBI when it's a listed entity. Governance, when it was a listed entity, LODR had come into the picture. Here the SEBI shall come into the picture. Let's read out this. The responsibility of the Board of Directors in the area of the compliance are generally established by prevailing law in the nation. The responsibility of the management is established by both prevailing law and the oversight of the Board of Directors. What does the prevailing law in our country, the Companies Act 2013, has to say about this? It imposes overall responsibility on the Board of Directors with regard to compliance. Section 134, Section 5, concerning the Director's responsibility statement, clause F, thereof that stipulates that what is the compliance requirement? Exactly copy pasted from the law. The director had devised proper system to ensure compliance with the provision of all applicable law. And that such a system where adequate and the system is adequate to comply with the law, and whether the system is effectively operating or not. Zimmedari overall director. Similarly, 205 of the Companies Act, functioning of the company secretary, the official position in the company. It is also defining the function of the company secretary shall include to report to the board about the compliance of the provision of this act, rule made thereunder, and the law applicable to the company. For the listed entity, LODR, listing obligation and disclosure requirement, regulation 2015, the board of directors of the company shall have additional responsibility on governance. Chapter 2, regulation 4.2, subclause F of LODR mandates the responsibility of board of directors as following. Key functioning of the board of directors to ensure integrity of the listed entities accounting and financial system, including independent audit, appropriate system to control in place, in particular system of the risk management, financial operational control, and compliance with the law and relevant standard. In addition to that, chapter 3, section 6, it further states that listed entity shall appoint a qualified company secretary as compliance officer, and as stated over here, that shall be his requirement to comply as to the law and regulation. Not getting much into the charters of the legal language, but friends, as you can see, the standard has taken the reference from the prevailing law in our country. And whenever, if there are any changes, then whatever law and regulation would be there, whatever person or whosoever designation would be mentioned under that law to be the compliance officer, they shall continue to remain responsible for the same. Further, the BOD shall periodically review compliance report pertaining to all the law applicable to the listed entity, which are prepared by the listed entity, as well as the steps taken by the listed entity to rectify instance of the non-compliance. Chief Executive Officer and Chief Financial Officer will provide the compliance certificate. Earlier, governance also we talked about the certificate. Here, authority is mentioned. We will give the certificate of the compliance to the BOD as specified in Part B of Schedule 2. Hence, compliance seen as the essential element of the business function. Is seen as the essential element of the business functioning, which is serving consequences and penalties from compliance. Therefore, the overall responsibility of developing, implementing, monitoring the compliance framework is primarily rests with the board of directors and the management. These bring us to the end of responsibility of the management. Now the responsibility of internal auditor. Again, same three parts: governance structure, the way we discussed about. Similarly, the compliance structure exists, does not exist, and independent report on the compliance. So nature and extent of the internal audit procedure to be conducted in the area of compliance is dependent on whether the framework is in place or not, and maturity of the process. Same wording. Whether the management has implemented a formal framework, compliance framework. And unless specifically excluded from your scope, the auditor shall plan and perform the internal audit procedure to evaluate the same thing. I will not repeat now the explanation. Design, implementation, and operating effectiveness of compliance framework so as to provide independent assurance to the management and those who are charged with the governance. No compliance framework exists, then the internal auditor will design himself a checklist, conduct the audit procedure with a view to highlight any exposure to the risk arising out from the weak or absence of compliance activity and the procedure, and shall make recommendation to implement and strengthen the weaker one compliance framework to those process and thereby improve the exactly the same like the earlier framework. There I elaborated it to a larger extent. I'll get into the third point, and where you are asked to give independent assurance. Then issuance of the opinion over design, implementation, and operating effectiveness for the compliance. Then it will be taken up in line with the requirement of SIA 110, which talks about nature of assurance which you need to give, specifically with regard to the need to have formal compliance framework in place, which shall form the basis of such. Exactly the same like earlier one. That's why here I spend more time on defining and making you clear about the compliance framework, CLR, compliance with respect to the law and regulation, responsibility purely defined by the law and LODR over here. Further, now responsibility of the auditor, while in the primary objective of internal auditor is to strengthen the system, procedure of the compliance, there may be instances where the internal auditor is asked to undertake compliance audit assignment with the primary objective to identify instances of non-compliance. You are required to give the list and the instances of this. Then in that situation where no formal compliance is in place, structure framework is not in place, then he will not be able to provide a written opinion in line with his, which is required by SI 110. But nevertheless, summary of the finding may be possible, listing an instances of non-compliance which you would identify during your auditing as a result of the internal procedure undertaken. And this finding will be reported along with the following. What is the scope? Specific law and regulation, give a list. What audit procedure did we perform? What sample did I select? And what was the entire population covered? And how did I perform this work? Summarize, certainly document the limitation and give that as a part of the internal audit report on the responsibility, etc. of the internal auditor, and any other such inherent limitation would be specifically mentioned. And the internal auditor shall not assume any responsibility to manage, operate, or comply the framework. I am to check and comment whether the framework is there or not, the legal regulation, law and regulations are complied with or not, what is the risk and what is the impact of the same, and not assume any responsibility to manage, operate, or comply the compliance framework as if you are acting in the capacity of the compliance officer or taking the ownership of the process. Do not do that. It's not part of your internal auditing work. Neither it is the responsibility of the internal auditor to execute, resolve the compliance related risks, that is engaging directly with the regulations, regulators, etc. Right? Auditing in the compliance framework, there is again certain, kind of a checklist which has been given. How one would be going ahead with as a explanatory comment. This earlier paragraph was the requirement. I'll take 3 minutes, moderator ma'am, to conclude this. We talked about responsibility in 3 points. Framework exists, framework does not exist. You need to view the independent. Now the method. Explanatory comments. How the auditor will take up the procedure. Definition, responsibility, procedure. Where there is a formal compliance framework is in place. Then what you will check? Compliance framework. How is it? Whether it is consistent with the best in class, globally recognized framework or not. Then what you have implemented mechanisms such as compliance policy, supporting procedure. This is a policy to comply, but have you defined the procedures or not? Setting the right tone at the top with the supporting message activity from the top to the bottom. One good tone culture has been set up or not? Designed compliance structure, appointed compliance officers, and assigned each compliance a specific compliance owner, who is the officer, who are the owner of the process, as you have seen in the earlier one, not elaborating. Identify all the law and regulation. This is the challenge. We would be able to identify labor law, company law, commercial law, and everything, but certain other law which are very specific to that industry, food and food related regulations, safety related regulations, with taking the help of an expert, I would be identifying them and then checking the compliance being done or not. Regulatory conducting the trainings, implementing robust compliance system, continuously track the performance against the compliance, and establishing the timely communication. Compliance system and procedure in place are operating in the effective, efficient, timely manner or not. Any shortcoming would be resulting as a recommendation, improvement, suggestion, etc. Second explanatory note. Where management has not implemented the formal compliance framework, then auditor will conduct the auditing procedure on the various compliance related activity which may or may not be present. It would be supported by certain system which may result into the recommendations or desired actions to be undertaken for establishing the framework. Third, independent assurance over the compliance framework, where a written assurance report is required to be issued by the internal auditor, then it shall consider the following as basis of your opinion into that written report. Linkages of the compliance framework with the others, process, whether in place, same, self-assessment, certification, etc. Right? So this brings me to this particular end of both the standard, where the explanatory comment were going more or less in the similar manner. We need to concentrate more on the definition part. We should be understanding what is there in my responsibility, what is not there in my responsibility. Then the third portion, the deliverable in three situations, whether the formal framework exists, framework does not exist, or specific report that I should be in the position to. Right. So this is it from my side. I have taken approximate 5 minutes extra, madam, compared to the time given up to 8:20 p.m. Thank you. Thank you so much.
Thank you so much, sir, for such a great session. Thank you so much, sir. We got a chance to learn so many new things from you in such an interesting manner. Now we will start with a question answer session. We have received some questions from the members during the webinar. So our faculties will be answering those questions now. So now first question, which came during first session, is from CA Bhabani Shankar Paul, sir. And the question is, sir, please elaborate on some industry-specific exposures like power, steel, cement, etc.
Very good question by Bhavani Shankar ji, and he is asking about industry specific exposures. And if I am not wrong, here exposure is termed as risk, because I have used the term of exposure as an alternate of risk. So let us talk about thermal power industry. If he has given example of power industry, energy industry, in thermal power, what happens? Either pet coke or bitumen or any imported coke that is being used to produce the thermal power. And what happens? It results into environment degradation as well. And at several times, Government of India, National Green Tribunal, and some courts, High Courts and Supreme Court has also taken cognizance about the environment degradation in the form of particles of fly ash, in the form of we can say the air pollution. So they have taken cognizance of all these factors, considering the working of thermal power plants. So if we take the industry specific exposure, so that is the first thing for thermal power plant. Another example I want to take, industry specific, that is all about paper industry. Immediately I recall this example. In Muzaffarnagar, there are a lot of such paper manufacturers, and what those mills they do, there are some compliances. There are some restrictions by government on the use of, on the quantity of which they use from the raw material, that is called for production of virgin paper. And secondly, there is the specific composition of use of recycled material, recycled paper, that they say is the scrape. And they purchase the scrape of corrugated boxes and all. They purchase it, they import it, and they purchase from the local sources. After that, they have to recycle that scrape that they have purchased. And in that process, the plenty of water is required. In that process. And what the wastage of that particular water, or we can say the wastage of that slugs, that the mills, the companies, they leave it outside the mill, and ultimately that is damaging the environment. So several times NGT put some restrictions on those mills. Specifically, you can say in the year 2-3 months, particularly in a year 2-3 months are the period when they have to stop their production completely. Another example also we can take, that any company or any real estate sector entity which is engaged in construction of buildings, construction of highway projects and all these things, and working in Delhi NCR, after 1 month, what is going to happen? Immediate after Diwali, court is going to take cognizance about it, and there will be restriction for the next 2-3 months on construction activities in Delhi NCR. So there are a number of examples which can denote the industry specific risk. In a particular industry, there are risks. Even in IT sector, in IT, the people are putting the hell of efforts for R&D. Today, I can say that my iPhone is perfect. It is good. But I don't know. In next month or next to next month, company may launch another such set of iPhone. and it will be obsoleted, or we can say its value will be decreased. I'm not talking in the term of customer, I'm talking in the term of in the capacity of a manufacturer of that particular product. I am a manufacturer of some vehicles. Let's take an example of automobile industry as well. All of a sudden, government of India has announced that we will promote EVs. So if an automobile industry based company that is purely engaged in diesel vehicle or petrol based vehicles, and they are not even planning for EVs, and at the same time another company of automobile industry, they have already completed their R&D for EVs, and now they are setting up the line for EVs. So they will take the first mover advantage. So there are a number of examples, Anahitaji, that particular risk which affect the particular industry. It can be risk in the form of government regulation, different regulation for different industry. It can be in the form of skilled staff members, because in every industry there is a requirement of some specific skill set, and there may be a scarcity of such skilled staff members as well. Another example that can be taken for the difference of the risk in the different sectors, that is based on the technology or R&D or the customer's choice as well. Customer sentiments as well, that is also risk. Like in the Bollywood industry, the people are facing the risk of customer sentiments. At the same time, one movie is blockbuster, and at the same time another movie get flopped, even though they are having higher budget. So customer sentiments is also nowadays we can say the one factor of risk in Bollywood industry. Nayan want to add one thing. Yeah, Nayan please.
Taking clue from what standard I took up, there also there is I took example of the specific law affecting to the particular industry. Right. You are sometime regulated with the rates by the government, or maybe the supplies, or maybe the forex fluctuation you are taking the gauging. So risk industry specific could be any, and particularly the law which is affecting to your industry. And if you fail grossly to comply with that, sometime the effect and impact would be such a large to impact your going concern. And nowadays, the particular law which one must look at is the law related to your state subject, that is the pollution control. Every state has got the pollution control board, and with the environment enhancement compliance and the jo jagrati aa gayi hai, a lot of awareness which has come globally with respect to the environment compliance. If the companies, those who are taking it casually, or those who are not geared up to install such a processing plant for their residuary water or anything, they are going to take a hit up to the going concern, which is going to be at challenge, right?
I would like to thank our respected faculties for answering all the questions and for the great presentation. Thanks to IASB Chairman Sir, Vice Chairman Sir, and the entire IASB team for organizing this session. Thanks to Chairman Sir, Chandigarh branch for hosting this session. And thanks to our speakers for taking up this session. It was a pleasure to have you all with us. So this concludes the webinar. Thank you all for attending. We hope you all have learned and enjoyed this webinar. Thank you so much.
Thank you.